Good evening. This is Duane Lowry for the DPP Grain Desk on Sunday, January 27th. It's currently 2:45 in the afternoon. I'm not sure what we have here that's important here this afternoon. It's kind of somewhat similar to last week. Last week, if you remember, the markets opened higher and there was quite a bit of bullish enthusiasm early. I'm not exactly sure what the stated reason was at the time, but I think maybe a spin on South American weather. But as we talked about last week, the market was vulnerable to some sort of technical correction, maybe spending a few days in that type of mode. Well, the markets performed, pretty strongly last Sunday night, but as the week evolved, and even as Sunday evolved into Monday, or actually because of the holiday, Monday evolved into Tuesday, prices eased back, and we did spend a few days in corrective mode, and then Friday we ended up having a pretty strong up session and rejecting early weakness, which certainly left a positive flavor in the tone for the market Friday afternoon. But as we return here this week, we look at South American weather. I don't think the market has been showing signs of being aggressively attached at the hip, and any consistent correlation between day-to-day South American weather forecasts and price action yet. That is what we look for some influence here on Sunday night. Some people are going to look at South American weather and focus on the areas that are not likely to get rain over the next 1 or 2 weeks. Maybe you got 30%, a third of Argentina that's going to be too dry, but I don't think anybody's out there forecasting some major large drop in production potential, and I think that's probably an important thing to be aware of. The other thing that's important to remember is I think in general the trade has somewhat of a bearish bias, that they're leaning on all of these markets with a certain amount of distrust to bullish arguments, to bullish days price actions and things of this nature, especially in the beans. They see a large South American supplies coming this year, and they're less focused on tight U.S. supplies, and they're less focused on what will probably be likely transportation issues with the South American harvest. But those will be factors that will probably trade another day. So the trade comes in here a little bit in distrust of Friday's strength in beans, Friday's strength in wheat, and I think the forecast allows them to feed a little bit on that distrust. A certain amount of increased rains in the eastern Midwest, a little bit of scatterings of very light precip in the western Midwest. A little bit of precip will probably affect the southern plains, but overall the dryness concerns in the U.S. southern plains is going to remain an issue, and it looks like it's going to stay in the forecast that way. The western Midwest, the northwestern Midwest specifically, still is dry, so you still got that as a backdrop. And the South American forecast has enough rain in parts of Argentina, enough stabilization, improvement, favorable or acceptable conditions in Brazil, that I think it's difficult to get too excited on South American weather. Short-term technical conditions offer mixed signals after Friday's performances, but to imply that we can't burn another few days of some sort of choppy, sideways corrective activity that somehow manages to test out or challenge last week's lows, I think it would be naive to think that couldn't happen. You also have the Fed meeting beginning on Tuesday morning. That'll end on Wednesday. And then at 1:15 there's the typical Fed announcement. I wouldn't be surprised that as that evolves, that's going to be a potentially bearish influence on disappointment from the Fed, that they're not going to do anything more aggressively. They'll give the typical language that they'll be there ready to do something if needed, but I don't think they're likely to offer anything really new. There's also becoming more of a two-sided debate within the Fed as to whether or not more stimulus is needed, or whether we should be starting to back away from the stimulus approach that we've got. So I wouldn't be surprised there's somewhat of a change of language that might be interpreted as a little negative or disappointing to commodities. Certainly have overbought conditions in the stock index. The crude is vulnerable. The fundamentals in the crude are not really bullish. So you have other factors here that could create some bearish sentiment coming from that could also weigh on the grains. So I think it's going to boil down tonight to whether or not the trade wants to embrace some sort of bullish spin on South American weather. I don't think that's what the trade's going to do, but there'll probably be some attempts to expect that. So I'm going to say that the calls are going to be legitimately mixed. I think expectations are mixed. From a bigger picture perspective, last week's lows likely define the near the bottom side of likely parameters over the next several weeks, maybe the next few months. And if we get some sort of a test or a probe of last week's lows, that's an opportunity to look for longer-term ownership. I think there'll be limited downside potential below those levels of last week's lows, but in the same token, I certainly wouldn't want to rule out the idea that we could test those lows again. I think it's very possible, and the market action to me looks a little bit suspect that maybe we go down and test that area again and see just what we have for support. But even though we're focused on this micro analysis of short-term expectations over the next few days, just because that's what we have to do, I think it's very important to keep in focus the idea that old crop corn has a job to do. It's got a ration demand. It's a real demand rationing situation that has to occur. And this is going to lead to some higher prices here in the weeks and the next few months ahead. And any short-term weakness here is not going to be able to develop into some sort of a downtrend. There may be various new crop scenarios for corn, especially, but that's something better left for another day. That's not going to be driving the overall market tone here over the next 30 or 60 days. So the same thing could be said and true about wheat. You got some supportive old crop wheat fundamentals. You can look ahead to new crop, and if we end up having a decent northern hemisphere global crop, you can build an argument that wheat prices are probably too high already. But I think for a while, we still have some opportunity for some short-term upside potential. Beans are somewhat of a similar situation. You can build an argument that there's plentiful global supplies and prices will struggle to go higher because we're going to have a decent South American crop, and I think that's all a legitimate storyline. But there's an awful lot of demand and business that's going to try to take place in a relatively narrow window. There's going to be a lot of competition for those South American supplies, and I think there's a good chance that you're going to have logistical problems which will force some business back to the U.S. The U.S. has got very tight supplies. That implies you're going to get strong spreads. You're going to get a strong flat price move yet because of that. And I think I think all of these markets have an opportunity to produce some better values before they get focused on a more bearish new crop outlook. So we hope that over the next 60 days we get this positive uplift and focus on old crop values that allow new crop values to come up, even if it's kicking and screaming, to provide some good, needed, legitimate, and warranted new crop hedging opportunities for producers looking ahead for 13 and even looking ahead into 2014. So for the DPP Grain Desk, this has been Duane Lowry. Thank you.